Welcome back. Today someone requested me to explain the solution of this illustration relating to section 10AA. The illustration is like this. Solar Software Limited, an Indian company, started a new software exporting undertaking in a special economic zone during financial year 9-10. From the following information for the year ended on 31st-3-2022, compute exemption allowable to the company under section 10AA for assessment year 22-23. Their domestic sale is 90 lakh, export sale is 210 lakh, business profit after debiting depreciation 10 lakh is rupees 60 lakh. As per IT rules, depreciation would be 12 lakh. Consideration received in India in respect of the export turnover is 180 lakh. Out of this 210 lakh sale, 180 lakh sale has been received, money has been received. Amount transferred to SEZ Reinvestment Allowance Reserve account, it is rupees 15 lakh. Okay. Now, we are supposed to compute exemption under section 10AA. First, section 10AA states that for first 5 years, deduction is available as 100% of ET by TT into profit. Okay. In next 5 years, the same thing, but it would be 50%. It would be 50%. And in next 5 years, it would be 50% of the aforesaid formula of profit into ET by TT. Okay. However, here one more restriction is that the amount should be invested into this reserve. That means the deduction, the exemption is available to the extent, maximum to the extent of amount invested in this reserve. Okay. Now, first of all, we are required to compute the profit, then our export turnover, and then we will convert that in 50% of it, and then we will compare this one with this amount. I am repeating. First, we are supposed to compute business profit. Second, we are supposed to calculate export turnover. Third, we are supposed to examine whether 100% or 50% is applicable. Number 4, whether this reserve is required or not. Reserve is required in third chunk of the deduction, that is 5 years, 5 years and 5 years. That means after 10 years up to 15 years, if someone is trying to claim exemption under section 10AA, he is required to invest money into this reserve. Now, the company has started its business from 2009-10. Can I say that it falls into this block? It is not in first 5 years. It is not in second 5 years. It falls in the block of third 5 years. So we are required to compute our exemption considering all these 4 steps. First, I am calculating business profit. How could I calculate my business profit? My business profit, it is given at 60 lakh. Okay. 60 lakh is my accounting profit, but it includes, that means my PL has been debited by depreciation of rupees 10 lakh. Okay. So I add back this one, and depreciation as per IT rules, we reduce this one. That means 60 plus 10 minus 12, I got 58 lakh as my profit. 58 lakh as my business profit. It should be business profit. Okay. 58 lakh as my business profit. 60 lakh is my accounting profit. I add back both depreciation and reduce income tax depreciation, got 58 lakh. Now comes to export turnover. The export turnover for the purpose of such 10AA is considered the amount realized. This one is not considered as export turnover. This one is considered as export turnover, that is money realized in India. Consideration received in India is considered as export turnover. That means 180 shall be considered as my export turnover. 180 is my export turnover. Now comes to total turnover. This is my total turnover. 90 plus 210 is considered as my total turnover. That means my 300 is my total turnover. Now I applied 58 is my profit, business profit, into ET. ET is 180 by TT, that is total turnover is 300. I got a figure and 50% of it. I got a figure of 17.4. Now I will compare this one with the amount invested into this reserve. SEZ Reinvestment Alliance Reserve Account. Amount transferred to this reserve is only 15 lakh. Whichever is lower is eligible for exemption under section 10AA. Hopefully I successfully clear your doubts.